Good evening and thank you for joining us. Tonight we begin with a breaking story that could have far-reaching consequences for the global economy, American agriculture, and international trade relations. Let's get straight to the major development we're following. China, the world's largest importer of soybeans, has abruptly canceled all of its outstanding orders for American soybeans. This decision comes as a shock to both industry experts and farmers across the United States, who rely heavily on the Chinese market for their livelihoods. Just hours ago, Chinese trade officials notified U.S. exporters that all pending shipments of soybeans would be halted, effective immediately. This means that millions of tons of soybeans, which were already scheduled for delivery, are now left in limbo. Farmers, exporters, and shipping companies are scrambling to figure out what to do next, as the ripple effects of this decision begin to spread. To put this into perspective, we're talking about 2.4 million tons of soybeans, an amount worth approximately $1.1 billion. These soybeans were destined for Chinese ports, but now, they're stranded in storage facilities, on barges, and at shipping terminals across the country. For many American farmers, this represents not just a financial setback, but a potential crisis. The sudden cancellation has sent shockwaves through the agricultural community. Many farmers had already invested heavily in planting, harvesting, and preparing these crops for export. Now, with the Chinese market closed off, they're left searching for alternative buyers in an already saturated global market. The impact is being felt not just on farms, but throughout rural communities, where soybean sales support local businesses, equipment suppliers, and jobs. On Wall Street and in commodity markets, the news has triggered immediate reactions. Soybean prices have dropped sharply, and traders are bracing for further volatility as the situation develops. Agricultural economists warn that the effects could extend beyond soybeans, potentially impacting other crops and related industries. Community leaders are calling emergency meetings to discuss how to support affected farmers and prevent a broader economic downturn in rural America. In the coming days, we'll be breaking down what this means for American farmers, local businesses, and the broader U.S. economy. We'll also be looking at the possible reasons behind China's decision and what it could signal for future trade relations between the two countries. Stay with us as we continue to follow this developing story and bring you updates on the impact and the response from communities across the nation. So why are soybeans such a big deal? Well, they're not just something you find on your dinner plate. Soybeans are incredibly versatile. They're crushed to make soybean oil, a key ingredient in cooking oils and processed foods. Think about all the things you buy at the grocery store that contain soybean oil. It's a lot. Soybeans are also used to make animal feed, especially for livestock like pigs and chickens. China is the world's largest consumer of soybeans. Every year, the country imports hundreds of millions of tons of soybeans from all over the world, especially from countries like the United States and Brazil. These soybeans are a crucial part of China's food supply chain, and they play a vital role in feeding both people and animals across the nation. The scale of China's soybean consumption is truly staggering, making it a key player in the global agricultural market. They use a huge amount of soybeans to feed their population and their livestock. In fact, soybeans are a staple ingredient in many Chinese foods, from tofu and soy milk to cooking oils and sauces. But perhaps even more importantly, soybeans are a primary source of protein for China's massive livestock industry. Pigs, chickens, and cattle are all fed with soybean meal, which helps support the country's growing demand for meat and dairy products. Without a steady supply of soybeans, it would be difficult for China to maintain its current levels of food production and consumption. When they cancel an order this large, it floods the market. Imagine millions of tons of soybeans that were supposed to be shipped to China suddenly looking for a new home. These soybeans don't just disappear, they need to be sold somewhere, and quickly. This sudden surplus creates a ripple effect throughout the global market, impacting prices and trade relationships between countries. The shockwaves can be felt by farmers, traders, and consumers all around the world. Think of it like this. Imagine going to sell your car and suddenly there are 100 more just like it for sale on your street. With so many similar cars available, buyers have more choices and sellers have to compete by lowering their prices. The same thing happens with soybeans. When there's a sudden glut of supply, the value of each bushel drops and it becomes much harder for farmers to make a profit. The price is going to go down, right? That's basic economics. When supply outpaces demand, prices fall. For soybean farmers, this means the crops they've worked so hard to grow and harvest could suddenly be worth much less than they expected. This kind of market volatility can be devastating, especially for those who rely on stable prices to plan their livelihoods and support their families. That's what American farmers are worried about now. Many of them depend on exports to China as a major source of income. When those orders are canceled, it's not just a number on a spreadsheet, it's a real threat to their businesses and their way of life. The uncertainty can lead to tough decisions about planting, investing, and even staying in farming at all. For these farmers, the impact of a canceled order goes far beyond the fields. It affects entire communities and the future of rural America. The recent decision by China to cancel several large soybean orders has left many in the global agricultural and trade industries searching for answers. While the move may seem sudden, there are actually a number of possible explanations behind this significant shift. Let's take a closer look at some of the leading theories that experts and analysts are considering to understand why China made this choice, and what it could mean for the future of international trade. One major possibility is the ongoing trade tensions between the United States and China. Over the past several years, the relationship between these two economic giants has been marked by uncertainty and conflict, especially when it comes to tariffs and trade agreements. The imposition of tariffs on a wide range of goods has made it more expensive and complicated for both countries to do business with each other. This environment of unpredictability may have prompted China to reconsider its reliance on U.S. agricultural products, including soybeans, as a way to protect its own economic interests. These tensions have been simmering for years, with both sides imposing tariffs and counter-tariffs on each other's goods. The result has been a challenging environment for exporters and importers alike, with many companies facing increased costs and logistical hurdles. For China, canceling these orders could be a strategic move to send a message, or to avoid potential losses if the situation escalates further. Another important factor to consider is China's ongoing efforts to become more self-sufficient in its food supply. In recent years, the Chinese government has made food security a top priority, encouraging domestic farmers to increase production and reduce dependence on foreign imports. By investing in its own agricultural sector, China hopes to shield itself from global market fluctuations and potential supply chain disruptions. They might be investing heavily in growing more of their own soybeans, providing subsidies and support to local farmers, and adopting new technologies to boost yields. This push for self-reliance is not just about economics, it's also about national security and ensuring that the country can feed its population even in times of global uncertainty. Additionally, China may be diversifying its sources of soybeans by turning to new suppliers in other countries, such as Brazil and Argentina. These nations have become major players in the global soybean market, offering competitive prices and reliable supply chains. By spreading out its purchases, China can reduce its vulnerability to political or economic disruptions in any one country and ensure a steady flow of this vital commodity for its growing population. This cancellation has a direct impact on American soybean farmers, many of whom rely heavily on exports to China. They're now stuck with a surplus of soybeans and nowhere to sell them. This could lead to lower prices for their crops, which would mean less income for them and their families. It also affects American businesses involved in processing, shipping, and trading soybeans. The ripple effects of this cancellation could be far-reaching. When farmers earn less, they have less money to spend in their local communities. This can hurt businesses and potentially lead to job losses. The cancellation could also impact trade relations between the United States and China, making it harder to resolve existing trade disputes and potentially leading to further economic uncertainty. The situation is still developing, and it's too early to say for sure what will happen next. American farmers are hoping that the government will step in to help them find new markets for their soybeans or provide financial assistance. China, on the other hand, will be looking for alternative sources of soybeans to meet its needs. This situation highlights the complexities of global trade and the interconnectedness of the world's economies. This is undoubtedly a challenging time for American soybean farmers and the agricultural industry. However, it's important to remember that the American spirit is one of resilience and innovation. By working together, finding creative solutions, and adapting to changing circumstances, we can navigate these challenges and build a more sustainable and prosperous future for all.